Hey everybody, welcome back once again to the Crow's Nest and the Wealth Advisory's Top Stocks. As you can tell from my festive attire and my colleague's green shirt, we're going on to December. We're coming into the Christmas season here, the holiday season for those who are offended by Christmas. I'm sorry.
I don't think no one's offended by Christmas.
I hope nobody's offended by Christmas. It's just all about like being nice and giving and stuff like that.
I think we're all on board with Christmas.
I like Christmas. I'm a big fan. I like presents and I like the holidays. I love Christmas. What can I say? It takes me back to my childhood. Hot cider. And,
really going out on a limb there.
Yeah, I love it. We used to go caroling when I was a kid. Lots of fun. We got lots of fun coming up here, guys. We're coming through a month that was less than fun though, and we're filming this a little bit early because for us who are filming this, next week is Thanksgiving. For you who are watching it, last week was Thanksgiving. So there's going to be a little gap in there between when we filmed it because our offices are closed for Thanksgiving. We don't want to stress out our studio staff, so we're trying to get things done a little bit ahead of time, and we really appreciate your patience with that. So I'm not going to do a huge market recap. I'm going to say that markets were looking really good. October, we were really bullish. Markets did really well in October. November, coming into November, everybody was pretty bullish, but unfortunately November did what it normally doesn't do. November is usually one of the strongest months for the market, but this November markets pulled back, the government reopened, people started paying attention to economic data again. Turns out we're not going to get some of that. But the October, I guess, jobs data is not going to come out. And I feel like when there's data that's good, they don't refuse to release it. So you got to wonder how those numbers are looking. And anyway, we're seeing more inflation. We're seeing more layoffs. The market was dropping. People were getting worried that the AI bubble was getting ready to pop because it's definitely a bubble. Like, let's be honest. We've been honest about that multiple times. It's a bubble, but bubbles are fun until they pop. I was listening to Bloomberg Radio on the way in, and they were sort of talking about, this is like 1997 internet bubble. If you sold your stocks then, you missed out on a lot of money, on a lot of profits. And basically they were saying that the most rational thing to do when you identify a bubble is participate in it. And that's sort of what we've been telling you. To give you an exact time frame for when we're recording this, last night NVIDIA reported earnings. They were blockbuster, and they really put, I think, the lid on any sort of narrative that the AI trade is getting ready to die and that the spending's ready to pull back. They're seeing huge spending. They were sold out on GPUs. They're forecasting, mega growth for next year, and they're not factoring any sales to China into that growth. But they're still working on, working with the China government, working with the U.S. government to try and figure out how they can sell chips to everybody. So really, if they get any chip sales from China, that's just boom, blow up there. It's like a lottery ticket. But so I think that sort of put the tamper on the whole idea that the AI trade's over. It's not over. It's going to keep driving markets higher. They're spending a lot of money. GDP Now forecast earlier this week, which is a couple of weeks ago for you guys at this point, but potentially still accurate, was at 4%. 4%, which really says that the economy is growing. That this AI spending is really driving the economy forward, and it's going to continue. We're seeing signs that inflation is going to be moderating. Jobs aren't looking great, but basically there's sort of this freeze where companies aren't firing, but they're not hiring. We are seeing some more layoffs coming from the tech companies, but I think that what you're seeing there is the cost savings of AI in action. So it's a really interesting time, and I think that we've been pretty open with you, saying that when we see dips in this market that you need to be buying them. That's how you outperform the market. And I think this dip that we just went through is really setting us up for a good Santa Claus rally. And I think we've got a really good list for you guys to help you take advantage of the rally that we see coming. So with that, I'm going to go ahead and just point out to everybody watching on YouTube, as I always do, that this is a service that we provide for the paying subscribers to the Crow's Nest and the Wealth Advisory. We don't think it'd be fair to give away for free something that we charge them for access to, so we're just going to do the first 4 stocks for you guys, and then we're going to cut it off. If you want to get the entire list, we would love to have you as a full member of the Wealth Advisory and or the Crow's Nest, preferably both, because then you get access to both Jason and myself. We've got a stellar deal for you. It's a bundle, the 2 services for less than you would pay. It's almost less than you would pay for either of them separately. It's a really good deal. You don't just get the top stocks. You'll also get weekly updates, monthly issues, new stock picks, reports, access to all of the stocks we've recommended in the past, all the reports we've written in the past, all the updates we've written in the past. It's really well worth the money. But like I always say, if you choose not to join us, we won't hold it against you. We'll keep putting these out for as long as you want to watch them. We just ask that you subscribe to the channel, hit the bell to make sure you get notified when we post new content, and give us a thumbs up or drop a comment below the video to let us know what you think. And with that, let's go ahead and get started on what I think is a pretty solid list for December. With my first pick, Albemarle. Now, we just brought this one back into the portfolio. Its ticker symbol is ALB. I like that. I'm just going to put a little box around there. Almost looks like it's part of the logo. I drew that so well. Or maybe part of the periodic table. You know, if I put like a little number up here, it's like an element. Anyway, sorry about that, guys. It's been a long week already, and we're coming into a long month. Anyway, we just brought this one back into the model portfolio. We had invested in it way back when, and we more than doubled our money on this one. We sold out when basically lithium prices started getting kind of crazy. And they had topped out. They were starting to pull back. People were seeing that, you know, the growth in the EV market wasn't quite as fast as everybody had predicted it was going to be. It was still growing, but not as quickly. Demand for lithium wasn't rising as fast as everybody had predicted it was, and the bottom sort of fell out of the market. We got out of Albemarle, saved the majority of our profits on that one, but lithium is just looking really, really good right now. I mean, low prices. It's starting to sort of look like it's coming back up. You're seeing CEOs of battery companies and things talking about how they're expecting demand to grow, you know, in the double digits. We're talking 25 to 30% next year. And really, it's just a super contrarian investment. I've been talking about this for several weeks, probably a month or two now, that, you know, lithium stocks, nobody wants to touch lithium stocks. You know, the same firms that were falling over themselves to tell you how great lithium stocks were a few years ago can't get rid of them fast enough and don't want to touch them. And honestly, that's the time you need to be buying them, because lithium is one of the building blocks of the future of energy. You know, we need battery energy storage systems if we're going to have solar farms, if we're going to have wind farms. You know, we need lithium to power all of our small electronics. This laptop on my desk right here is powered by a lithium battery. You know, our watches, our smartwatches, our smartphones, EVs, which, like I said, the growth is still there. It's just not as big as it was, but you know, they're still growing. You're talking about like 25% adoption a year, give or take. So there is a demand for lithium there, and the prices are going to start to reflect that soon. And this is just sort of how the market works. You know, you buy when nobody else wants to buy it, especially when there's, you know, a good fundamental reason for it. We need lithium. We're going to continue to need it into the future. That is definitely a driver of this one, and I think everybody needs to get back into Albemarle. So there's my first pick this month. And with that, I'm going to pass it over to Jason, who has another equally good one.
Yep, Verizon. I had this one in here last month, and I decided to keep it because it went up. And so this is a company in transition. I've been talking about it for a while. Its earnings have actually been pretty good. It beat earnings by 2 cents per share when it reported last for the third quarter. What people have been disturbed about is the drop in subscribers. They've kind of been hemorrhaging subscribers, but that's what they're working to correct. They just changed CEOs. They brought in Dan Schulman from PayPal. And they also, speaking, Dubs talked to Top Dot layoffs, they just announced a huge restructuring. It's going to cost about at least 13,000 jobs. So they're going to be slimming down, probably getting even more profitable. And a lot of that money, you can already see it's being redirected towards addressing that subscriber issue. Basically, you're going to be seeing a lot of Verizon ads this holiday season. I'm already seeing them. They're basically giving away the store. They're offering free iPads. They're offering free iPhones. They're doing everything they can to try to get that subscriber count heading in the right direction. And so that's one of the big reasons why the stock has been up over the past, or at least as far as this recording, is up 5%, even as the market was kind of shaky. And then the other thing I obviously always talk about with these carriers is you're in them for the yield, for the dividend yield, and you're still going to get about 7% yield from Verizon. So if you're looking at it, even just the past few weeks, a 5% gain in a couple weeks, and you still get a 7% annual dividend yield, I think, it found a floor around $37, $38 a share. Now it's back up a little over 40. It could go up conceivably by the end of next year to 50. You'd be looking at a 10 to 20% gain there, again, with a dividend yield that is going to give you more than you're getting in a lot of places when interest rates are being cut. So Verizon, I think, strong turnaround play, reliable business. It's gonna do well, rain or shine, and you can count on that basically dividend payout while you wait to bank on the turnaround play.
Yep. No, I like this one. It's a good one, and I think the market was sort of selling it off. More drastically than needed to be.
It was oversold.
Loss.
It was oversold for
it's
sure.
Still the biggest U.S. carrier.
Yeah,
with
they will turn it around. They're being very aggressive with the turnaround efforts, and so I think there's upside there.
Definitely. Those layoffs you mentioned were something like 20% of the workforce.
It
from the top to the bottom.
It was a lot.
Yeah, executives are going to get cut too. It's not just folks in the stores.
And they're going to redirect all that money, like I said, into growing the business.
Yep.
So
that's a good one. I like it. All right, guys. Coming up next is my second pick here, and it had a really rough month as of this recording, and potentially as of the time you're watching this. We'll see how things turn out for it. It's Centrus Energy, ticker symbol's LEU. LEU for low-enriched uranium, which is what they currently produce lots of, but they're working on high-assay low-enriched uranium, which is what the new generation of reactors is going to need. And basically, we're buying this one because it's sold off so much. It's down something like 30-40% from its top. People kind of got a little bit too excited maybe, and momentum guys started getting into the trade, and just it's going up, so we're buying it. And what happens when momentum guys are in a trade is when the trade stops going up, they stop buying it, they start selling it. So that really hammered Centrus. But this is still the only company in the U.S. that has a license to produce HALEU, that has the facilities to produce HALEU, and that has actually produced HALEU. Like, they've made deliveries of this stuff, and they're continuing to make it. These guys are going to be big going forward. This is a long-term trade, and I really think that we need to take advantage of this dip. This is not something that's going to last very long. So we need to buy the dip, even if it doesn't turn around in December. I recommend keep buying it. This one's going to be a good long-term winner. And like I like to say, you beat the market by buying it when it's down. All right, so that brings us to Jason's next pick, number 2. It's a good one. I like this one. It almost went into my picks.
Yeah, no, there's RTX. It is what it says it is, folks. It's RTX. And I talk about this company quite a bit. I've been following it for a long time. I've been really, really out there banging the drum for RTX for a long time, and it's paid off. I mean, it's gone up a ton. It does great. And typically when I talk about it, we're talking about defense. We're talking about missiles. All these kinds of things that you're seeing with the soaring defense budgets, and all of that has led to a huge amount of profitability for RTX. But then there's something else which I probably talk about less and should talk about more, which is the commercial side of their business. Pratt & Whitney, Collins Aerospace, which makes airplane and jet engines, and they are really kind of what's carried the ball for RTX over the past year or so. Their revenue was up 12%. Adjusted earnings up 17%, but the backlog, so this is where they're adding the contracts, $251 billion total. $148 billion of that is commercial compared to $103 billion, which is defense. So they get more from the commercial side than they do from the defense side, despite being one of the world's premier defense contractors. And they are in talks. One of the kind of sneaky good plays over the past few years, really since the pandemic, has actually been the airline industry, which has rebounded just tremendously, and the amount of volume that these carriers need. Specifically, we're talking about like Boeing and Airbus building more planes, trying to deliver more planes, many of them using RTX engines. And to that point, Pratt & Whitney is in discussions with Airbus about engine supplies over the next 3 years, because Airbus is on track to increase its engine sales this year by 7%. They're going to deliver 800, or aiming basically to deliver, forecast to deliver 820 jets this year. 820 jets, which is 7% more than they did in 2024, and that figure is going to keep climbing. In addition to that, a lot of airlines are facing delays because the existing engines and existing planes they have need repairs and they need maintenance, but there's a huge backlog for that as well. So on the commercial side of things with respect to jets and airplanes is that, they need new engines. The demand is extremely high to get new planes out there, while they're also trying to make up demand for maintenance and repairs on old jets. So there's a lot of commercial business to be had for a company like RTX, which again also benefits from trillion-dollar defense budgets, which we're seeing in the United States and Europe, talking about companies that makes, Patriot missiles, Tomahawk missiles, all these things. RTX is really kind of scooping it in with both hands right now, and that's why I continue to recommend this and why it continues to perform.
I love these guys. It's a great stock. It was up pretty bigly last month, I would say.
Yeah, it was up 8% over the past month.
I mean, if you're talking about compared to the markets, that's a lot.
That's much better. Again, another business that's not going anywhere too. I mean, if there is a downturn or economic or the market or whatever, if things take a turn for the worse, RTX isn't going anywhere. It's a long-term play as well as a short one.
Yeah, you've heard of consumer staples. This is like a government staple.
Yeah, it's not going anywhere.
All right, guys, that's our first four. So let's do a little recap here before we cut things off for those of you watching on YouTube. First up, we've got Albemarle. Like I said, just brought this one back into the model portfolio. Lithium's contrarian investment right now. Most people don't want to touch it with your 10-foot pole, let alone theirs. That's the time that you need to be buying. Lithium is going to be a driver of the future of energy. We're gonna continue to need more lithium to make more batteries. Albemarle is a big supplier. It's also the only U.S. firm with an active lithium mine in the U.S. So when the government wants to get its supply chain away from China, Albemarle is the logical place to look.
Yeah, Verizon, like I said, you're kind of buying into the pivot here, into the turnaround. Like I said, stock's around $40 per share now, give or take. I'd be pretty shocked if it wasn't at 45, 6 to 12 months from now, and then beyond that, closer to 50. That would put it more in line with its peers like AT&T in terms of valuation. Like I said, they're making moves, they're turning things around, they're really working to address the subscriber count. The earnings already fine. It's not really a problem with the earnings, it's more of a problem with the subscriber count. And so if they can just address that, just plug that hole in the ship, then you're going to get a nice bounce on this one.
It's a good one there. I like it. Next up, Centrus Energy. Again, future of energy. It's going to be reliant on all different sources. We've talked about this lots. And Centrus Energy is the only company in the U.S. that can currently make the fuel that those new reactors that everybody's so gung-ho on are going to need. It's the logical place for the government to look. It's the logical place for U.S. companies to look. It's a domestic company that's helping us, get our supply away from Russia. That there's all sorts of reasons to want to buy it, and it's down right now, so we should buy that dip.
Yeah, RTX defense wins championships. And then on top of that, the commercial business really humming in terms of airlines. Like I said, Airbus, Boeing, all these airlines really ramping up plane production, trying to get new models out there and also trying to fix the old ones.
All right, there you guys have it. I think that's a pretty solid list to start off December. For everybody watching on YouTube, we hope you have a great month. We hope you had a great Thanksgiving. We hope you have a Merry Christmas or a happy whatever holiday you celebrate this month. Take care. Thanks for watching. We'll see you next time.